Hi, everyone. I'm Lizette Gabriel, and I work as a librarian in the Business and Economics Department here at the Los Angeles Public Library, and your host for today, along with our panel of presenters. So this is a new one for us where we are actually have a live audience and our presenters. So bear with us if by any chance we mess up a little. So our presenters for today are Cesar Estrada from SBA. He's an outreach and marketing specialist. We have Swan Doe, director from the Women's Business Center in Humera. They are from PACE. We have Andrew Chung, senior vice president and SBA regional sales manager from Hanmi Bank. And lastly, we have Iman Cotton, loan officer, and Ida Landy, associate loan officer from CDC Small Business Finance 504 Loans. So today's program will focus on the fundamentals of financing your business. You will learn about SBA loan guarantee programs and how they work. Hear from our panel of lenders, each representing a different financing program. This program, as you probably already know, will be recorded and saved on the library's YouTube channel. So please send us your questions throughout the program, and we'll have a Q&A session afterwards. Okay, so now I'm going to present Humera from Swan, and then we will start. Oh, sorry, Swan.
So good afternoon. My name is Swan Doe, Director for the Women's Business Centers. Today I'm going to share with you a little bit about our services, and I'm going to have Humera. She's our loan counselor, and she'll go through our loan program with you. So our agenda today, again, we're covering services, type of financings, and small business resources. So let's move forward with our services. So we serve throughout the Los Angeles County. We provide one-on-one counseling, training, workshop, filing, obtaining business license permit, the standards. If your FICO score, your credit is not up hard, please reach out to us. We should assist you with that. And we'll also today, the key topic is access to capital. So for the business counseling, you're welcome to come in and talk about how to prepare a business plan, how to do marketing, strategizing. I come from a background of web design, graphic design, so I can actually sit down and talk to you about that as well. We also provide services to legal clinic. In terms of training, we have a key signatures entrepreneurial training program. It's a 25-hour that you actually could take for those who are starting a business. And the credit building, so we talked about already. So let's move forward with that. Besides the entrepreneur training program, we also have QuickBooks, social media, marketing, federal, state tax payroll seminars, small business tax workshop. So anything related to business startup workshop, or if you're actually starting a business, you're not growing, you don't want to know why you're not growing, reach out to us. We should be able to sit down and help you with your business on a one-on-one, and it's all free. Beside filing, what kind of business license you get is business license for the city based on what city you start your business in. If you need a food certification, we help with that. Getting a seller's permit to help you buy wholesale costs, obtaining an EIN, and also get a DBA. We're willing to review your credit report and see where you stand and how you're going to fix it. Let's move forward. So you can see on the screen, these are the resources, very helpful resources. Actually, you can reach out, connect to get additional resources. And I don't want to help any further. I want to just move to the next slide. I want to give the time to Humera to go through that loan service. So Humera, let's have you come up and talk about our loan product.
Thank you, Swan. So, as mentioned in this slide, we offer different types of loan products, and I'm going to be walking you through them. We have loans that are designed for small businesses to secure funding for a variety of needs, whether it's working capital, purchasing equipment, or refinancing high interest debt. I will provide a high-level overview of 6 products that address various business needs, including those of veteran-owned businesses. All these loans share some common features. You'll need a FICO score of 600 plus and no recent bankruptcy or foreclosure. Most require a personal guarantee and a UCC lien on business assets. The loans typically have a packaging fee up to 1% and a credit report fee. Some loans over $5,000 may require a guaranteed fee. We can move on to the next slide. Okay, I think I covered this as well. Yes, we're going to go over these 6 types of loans. So we can move forward. Okay, so our first loan product is our PACE mini micro loan. These loans are for businesses needing small amounts of capital between $500 and $5,000 and are ideal for credit building, seed capital, for startups, and working capital. You can also obtain a mini micro loan for marketing, advertising, business development, such as trade shows and emergency repairs. The terms are typically 1 to 3 years, and the interest rate is fixed at 9%, subject to change depending on Wall Street. One of the advantages here is that it's easy to apply, so even sole proprietors or newer businesses can qualify. Our next product is the SBA microloan program. The SBA microloan offers $5,000 to $50,000 in funding with a 3 to 6 year term and a fixed interest rate between 9 and 10%. You can use these funds for a variety of purposes, from debt refinancing to purchasing machinery, remodeling, seed capital for startups, and working capital. The collateral requirements are similar: a personal guarantee and a UCC lien on your business assets. This loan is also backed by an SBA guarantee, which makes it easier to qualify. Our third loan product is our regular working capital loan. For businesses needing larger amounts of funding, their regular working capital loan offers $50,000 to $350,000. The term is 5 to 10 years, and the interest rate remains 9 to 10% fixed. You can use this loan for things like debt refinancing, equipment purchases, and general working capital. It also requires a personal guarantee and a UCC lien, but again, the SBA guarantees make it more accessible. Our fourth program is the Contract Finance Assistance Program. This program is specific to contractors and offers $100,000 to $350,000 with a shorter 24-month term and an interest rate of 10 to 12%. It's designed to help you cover early project costs on contracts that have already been awarded. If you're a small business enterprise certified contractor, you can access this funding for construction and supply contracts with government agencies. Our next loan product is our PACE Green Loan. The PACE Green Loan targets businesses focused on sustainability and green initiatives. Examples of green small businesses include natural beauty products, eco-friendly packaging, green landscaping, and gardening. Other examples would be EV charging stations and hybrid car sharing services. It offers $25,000 to $350,000 for things like energy efficient machinery, working capital, or business improvements in green energy. This loan has an 8% interest rate and up to 10 years to pay back. It's specifically for minority-owned businesses and disinvested communities. So disinvested communities are neighborhoods or areas that have historically received limited financial resources, investments, and support from both public and private sectors. So if that applies to you, this is a great option. Our next product, which we're really excited about, this will, the VA revolving line of credit is a new product set to launch in the first quarter of 2025. This line of credit is being introduced in partnership with the Veterans Affairs Office, offering eligible veterans and service members flexible access to credit. The revolving line of credit allows borrowers to access funds as needed with the ability to borrow, repay, and borrow again. More details on eligibility, terms, and application procedures will be available closer to the product's official rollout. This loan offers up to $250,000, I'm sorry, $25,000 right now, with a 12-month term and an interest rate between 6.5 and 7.5 fixed interest. So it's designed for working capital, specifically for VA registered businesses. So whether you're just starting out or looking to grow your existing business, there's likely an SBA loan that fits your needs. The SBA microloan program and PACE mini microloans are perfect for smaller amounts and shorter terms, while the regular working capital loan and contract finance assistance program are designed for larger projects. And for those focused on sustainability or specific business communities, the PACE Green Loan and PACE Line of Credit offer additional benefits. These loans are all backed by the SBA, which can make them more accessible for businesses that might struggle to qualify for traditional bank finance. So thank you for your attention, and move forward with the presentation. Yes.
Oh, yes. Sorry about that. So our next presenter is going to be Andrew from Hanmi Bank.
Hi, my name is Andrew from Hanmi Bank. This is a local bank down here in Los Angeles. Hanmi Bank was established in 1982. We're about 7.7 billion in size, and as of today, we're serving 9 states with 32 branches. Okay, so to jump right into the presentation material, I think we have a very good mix of lenders here because we have PACE and CDC Community Advantage, and so this sounds like we have a whole spectrum of lending represented here. We typically focus on the traditional 7(a) product, which on the presentation you can see all the purposes that we entertain. So we do commercial property loans, we do business acquisitions, fixture, furniture, equipment, machinery purchases, and we also do refinancing as well, and also lastly, permanent working capital. So just to go over some of the basic eligibility requirements, it should be owned by a U.S. citizen or lawful permanent resident, no current criminal conviction, or any prior loss to the government. So we emphasize these because a lot of people, if they're defaulting student loans or something like that, then that is a eligibility issue for the SBA product. A lot of people ask about this and argue about this. Anyone who owns 20%, these are just SBA rules, it's not our bank rules. Any person that owns 20% of a company or a borrowing entity, as I like to call it, must personally guarantee the loan. Okay, so business startup financing is something that we do, but the requirements are a little bit more stringent. And we're looking for, this is a bank requirement, we're looking for minimum any type of ownership or management experience in the same industry. A lot of the specific industries like restaurants or any, let's say, graphic arts or something like that. We don't want anybody stepping into a brand new business without any experience at all. We'll go to the next slide. Okay, so because we focus a lot on the business acquisition and the property purchase loans, there's a down payment requirement, and typically we are looking for the last 2 months bank statements, and down payment can be either their own funds or gift from family and friends that needs to be verified. And down payment cannot be borrowed funds unless you have other income to service the payments for that loan, such as home equity line of credit. If you have, if your spouse or partner, whoever has another job, or if you have another job that makes enough money to service those debts, and then you can use it as down payment. Okay, so to explain the business acquisition a little bit further, Hami Bank typically lends up to 75% of the purchase price or business value. So we generally do up to 10 years of term. And so for retail businesses or location-specific businesses, we do require a lease term of 10 years to match the loan term as well. This is an SBA requirement. Business valuation reports are required for any loan that is $250,000 or more for acquiring any type of business through an SBA loan program. So we are looking for some type of management ownership experience, or even some type of a working experience if it's industry specific. And also there's a rule about collateral which for the 7A program, maybe not for some of the PACE loans or the community advantage loans, but if there is available real estate that's owned by the borrowers that has 25% or more of the gross equity, meaning if your property is $1 million and you have less than $750,000 in loans, then it may be subject to collateral. Next slide, please. So CRE purchase. So this, well, CRE stands for commercial real estate, for those who don't know. And Hami Bank will typically finance up to 90% and may include closing costs. If the loan to value exceeds 85%, SBA may require additional collateral. So again, going back to the previous slides, 75 or 25% gross equity is the rule of thumb here. And so there's an important rule for commercial properties is that the small business applicant must occupy at least 51% of the building. And if not currently, then it needs to be within 12 months. Because 12 months is what SBA typically considers as the temporary or the interim period. Okay, so CRE purchase loans are typically 25 years, fully amortizing with no balloon payment. So sometimes if you go get a commercial property loan from a commercial lender, there may be balloon payments, meaning your loan may become due in 5 years or 7 years or 10 years or something like that. The 7A program has no balloon payment. Next slide, please. So next is refinance. We'll do up to 10 or 25 years fully amortizing terms, depending on what we're refinancing. So some of the basic eligibility criteria is that the funds must have been, what we're refinancing, the previous loan or whatever else you have lien on the property, must have been used for the subject commercial property and or the subject business. So sometimes if there's no documentation, we may use some type of certification, but I mean, it kind of has to make sense, when we look at what it was for. Okay, so the current debt that you have that you're trying to refinance must have been current for the last 12 months of the loan. So, or life of the loan. If you're refinancing a loan with another bank or something like that, will typically require a payment history. If it's an individual, we might need some type of certification that all the payments were made and the loan is current. So this is a SBA rule that, the debt that you're trying to refinance should be on the business balance sheet, and any interest expenses should be shown on tax return or on the balance sheet portion of the tax return if applicable. And if it's a seller finance note, then the loan must have been in place and current for the past 24 months. So for those who don't understand what seller finance note is, when you buy a business, sometimes the seller will say, okay, I'll give you 2 years to pay me off. And after 2 years, you haven't quite made enough or saved enough money to pay off the loan, then we may be able to refinance that for you. Okay, so the other requirement for SBA refinance is that the payment should be at least 10% less than the current installment payment. So if your current payment is $1,000 and basically needs to be, or will be refinanced with a Hanmi Bank SBA loan, the payment needs to be $900 or less. Okay, the only exception to that is that if it's a line of credit or loan with a balloon payment, so something that's due, has a due payment on it, it would be the exception to that rule. Okay, so this is a standard 7-day loan fee schedule. As of right now, until September 30th of 2025, up to $1 million, there is no SBA loan guarantee fees. For loans over $1 million, it's 3.5% of the guaranteed portion, which is about typically 75% of the gross amount, and 3.75% for anything with a guaranteed portion of $1 million, meaning gross loan amount of $1.33 million or higher. So I know this may become difficult to understand. Typically up to about $2 million, your percentage on the gross loan amount would be about 2.67%, if that makes it easier for you to understand. And anything over 2 million or more would typically work out to about 3% of the gross loan amount. So those would be your guarantee fees that you pay to SBA for your loan. Okay, and then the other fee that we charge is basically the only fee the bank charges is the packaging fee for working on your loan. So just by different amounts, we have different packaging fees. Okay, so I was going to cover 504, but since we have the experts here, I will let Iman and Aida cover those.
Okay.
Thank you.
For all these loans, what are the repayments? As soon as you get the funding, when will you start making your?
It would basically be, so starting with the date of funding, you start accruing interest.
Okay.
So your first month payment may be just that interest. So let's say you got a loan on October 15th, and then so your November 1st payment might be just that portion.
So like prorated?
Yeah, maybe just for the first partial month, but it's basically a month after. It's just like a mortgage.
Okay. So like 45 days. Depending on when you close the loan, that's
Yeah.
when, okay.
Okay. It's Iman? Okay.
Thank you guys for having me. So I'm Iman Cotton. I'm with CBC Small Business Finance. I'm a loan officer and I cover the South Los Angeles area, but we blend in all states besides 6. So nevertheless, today I'm specifically going to talk about the Community Advantage Program. We also offer microloans just as they explained as well, but nevertheless, I focus on the Community Advantage Program. Next slide. We can go past this also. So first, we keep saying CDC and things of that nature, and it's like, is that the Certified Center of Disease? Or what is that? So a CDC is a Certified Development Company. CDCs are certified by the SBA to administer 504 loans. CDCs are private nonprofit entities with a mission to provide business financing to those who aren't quite strong enough for bank finances. So a CDC has less stringent requirements than your traditional financial institution. CDC Small Business Finance, we are a part of the Momentous Capital family. So on those flyers that I gave you guys, you'll see like Capital Impact Partners, who's our CDFI, which we can go to the next slide. And the CDFI is a community development financial institution. So CDFI has helped to promote access to capital and local economic growth in urban and rural low-income communities across the nation through monetary awards and the allocation of tax credit. Financial institutions are certified by the CDFI, so financial institutions certified by the CDF fund are eligible to apply for monetary funds and training to build organization capacity. These institutions have community development missions and a reputation for lending responsibly in low-income communities. CDFIs can be places like banks or bank holding companies, credit unions, loan funds, and venture capital funds. And there are more than 1,300 CDFIs in the nation. So Momentous Capital consists of CDC Small Business Finance, Capital Impact Partners, and then we have Ventures Technology, which is like if you've ever used Salesforce or a tracking system or a CRM system, Ventures Capital is our proprietary software that we created for lending. Next slide. So not all lenders are the same. We have PACE here, we have Omni Bank, and we have me, CDC here. We are not all the same. The SBA sets standard operating procedures, which provide the rules, processes, and guidelines an SBA lender may, must, or should follow. The credit box or the internal credit policy determines the lender's appetite for risk, such as minimum FICO scores, collateral requirements, length of time in business. We as lenders, we set those requirements ourselves, and it just depends on the appetite of each lender, and they'll say yes or no based on what you have going on. Next slide. Sorry, I'm trying to stay in the camera view also, so I'm trying to be mindful. Today, like I mentioned, I'm going to focus on the Community Advantage Program. Like I mentioned, we have the micro loan, which for us goes up to $50,000 as well. It's a 7-year term, but today specifically, I'll talk about the Community Advantage, which goes up to $350,000. The requirements for the Community Advantage and the micro loan are both the same. It just depends on how much money you actually need. The Community Advantage Program, it could be for startup businesses, existing businesses, expansion businesses, and acquisitions. I am the #1 SBA lender in the nation for the Community Advantage Program. Oh my God. Sorry. So again, I'm the #1 SBA lender in the nation for the Community Advantage Program. We offer this program in all states besides 6. The only states I cannot do is North Dakota, South Dakota, Tennessee, Utah, Vermont, and Alaska. So if you have any friends, family, organizations who need to know about us, please feel free to spread the word. The Community Advantage Program, the long range is now 30, a minimum of 30,000 up to 350. The Community Advantage allows non-bank lenders to make SBA 7(a) loans, just what he was just speaking of, and it's offered directly by CDC Small Business Finance and other approved alternative lenders. Let's get into the secret sauce, which is why you guys are all here. How do we qualify, right? So for a startup business with CDC Small Business Finance, all I need you to be able to do is to be able to cover your personal living expenses and the minimum payments currently reporting on your credit report, and we'll give you the business loan up to $350,000 simply based on your business plan and 24 months of financial projections. I'll say it again. for a startup business, all I need you to be able to do is to be able to cover your personal living expenses and the minimum payments reporting on your credit report, and we'll give you the business loan up to $350, simply based on your business plan and your 24 months of financial projections. We also want to see that you have skin in the game, or that you can have skin in the game. So on the community advantage sheet I gave you, it says 10%, but it's now been lowered to 5%. We only need 5% injection. I only need to see that you've contributed 5% of the loan amount towards your business in order for you to contribute, to cover the 5% injection. We also, because we're a nonprofit, we're not going to allow you nor us to put you in a bad situation. So we want to see that you have 10 to 15% for post-funding liquidity. That means after the loan has been funded, we want to make sure that you can still cover your personal living expenses and the minimum payments reporting on your credit report, regardless that the business loan does, regardless that the business does anything. So we want to make sure you have 5% injection and 10 to 15% for post-funding liquidity. So if you want 100,000, that's only 5,000 for the 5% injection, and then another 10 or 15,000 for the post-funding liquidity. This money can also be gifted. So if you don't personally have it, you have friends, family, whoever it may be, go figure it out and be gifted the money. The funds can come from your checking, savings, stocks, bonds, mutual funds, IRA, retirement account, and retirement accounts. So that's where the 5% injection and the 10 to 15% for post-funding liquidity. I'll go to existing and then I'll come back to you.
No, you're absolutely.
Perfect. For an existing business, please, 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 we are coming close to tax season. Tax avoidance and tax evasion is real. You have to show some money. You have to show net income if you want something. It's as simple as that. You have to show net income if you want something. And we only need $1 for every dollar. So my debt coverage ratio, or my debt service coverage ratio, is only 1 to 1. I just need you to have $1 in net income for every dollar in debt. So what that means is I need $1 in net income for every dollar in debt to cover your current business expenses, your current business debt, plus the new business loan. So for instance, you currently have credit cards that are $200 a month. Times 12, that's $2,400 a year that you know you need to at least show in net income. Let's say we want to add a loan to that, that's going to be another $800. Now we're at $1,000 a month in debt. You have to know you need to at least show $12,000 in net income to qualify. So net income, it's awesome that you made $1 million in revenue, but if you go write it all off, I can't approve you for anything. So you got to show some net income, okay, guys? So, and then it's a great time that we're having this conversation towards the end of the year. Just like you go do physicals once a year, this is the time to talk to one of us, or talk to all of us, or talk to all of us to see where do I need to land, or what needs to happen in order for me to qualify. So that's what those should be the year-end conversations that you're having, so you can set yourself up the correct way. So when you do go file taxes, you're not shooting yourself in the foot. Rates. The rate is prime. The rate is on the higher side. If you want to be talking to your bank, if you have great credit, great revenue, go talk to your bank. Go talk to your bank and let them approve you. I'm an alternative lender. So my rate is prime plus anywhere from 2.75 to 3.5%. So that's anywhere as of today, 10.75 up to 11.5%, which still isn't bad. It's a 10-year term, no prepayment penalty. The payment starts back in 30 to 45 days, just kind of like an auto loan or a personal unsecured loan. 10-year term, no prepayment penalties. I have no minimum credit score requirement. I have no personal collateral requirement, as long as we can approve the loan in-house. If it goes to the SBA, that's a different story. The SBA may require personal collateral, but I have no personal collateral, in-house. Yeah, next slide. Everybody always usually wants to know, what do we need to apply? So if you're a startup business, I'll let you guys snap a picture or get that information. And if anyone wants to ask me questions while these three are coming up, then please go for it.
So I know a lot of business owners have a job in addition to trying to build up a business.
Yes, and I want you to
Does that
keep that
count
job.
towards your income to run the business? or your
Absolutely.
objection?
So for instance, if you're a startup or even an existing business, the startup business, I love 70% of our loans have been funded to startup businesses, 0 days in business projection base. That's how much we like startup businesses. So if you do have a W-2 income, more than likely, prayerfully, or whatever, it's covering your personal living expenses and the minimum payments report on your credit report. So that's what we want to see, kind of cover the personal living expenses. And then I expect for you to keep that job at least a year after you've started the business. So the outside income definitely helps with the business coverage and also the global coverage, which is the business plus personal income. So 1-to-1 on the business and global coverage is what we're looking for an existing business. And on the if you're a startup, that just simply helps with the overall qualifying to be able to cover the personal expenses and minimum payments. And we look at total household. So if your spouse income is required to help your household, your spouse income will be required to assist the loan, simply put. So next slide. Oh, and then, so this is a startup. Then we have with the startup, the personal information will always stay the same. Anybody with 20% ownership or greater will always have to go on the application. It's always going to be the most current year tax return, the personal financial statement, which is the form that we have you guys sign, the personal expense form, which is the form that we have you sign, most recent pay stub, or just proof of income or proof of cash on hand. The business information, the most important thing is the 24 months of the financial projections as a startup, and then the plan, the debt schedule, lease agreement if applicable, and the bid if you're doing a build out. The next slide is for an existing business. Now we need 2 years of financials. So now I need the 2 years of the business tax returns and the 6 months of the bank statements, and the interim profit and loss statements. And it says 22 profit and loss, but just change that to the current years. So 2 years of business tax returns and the current year interim balance sheet and profit and loss statement. And then the last slide is for an acquisition. Now, if it's an acquisition, we just want the 3 most years of the seller's tax returns and the interim profit and loss statements, because we're going to do evaluation to make sure that the business comes back at the value that they're selling it at or greater. Next slide. We don't have to run through the success stories. I'll save those for the end, but for more questions if you guys want. But then I'll share my contact information, which should be in 2 more slides. There we go. And then please, anyone, please, you can shoot me a text message and I will send you my calendar link. Or you could just use my calendar link and hop right on my calendar, and I would love to talk to everybody and learn more about how I can help anyone. Yes, sir.
What is your definition of a startup?
So it's tricky. It used to be 2 years or less in business with us that we would count you as a startup. And then we just updated it about a month ago that any business that's been in business 1 year or greater with 3,000 or more in revenue is considered a startup. So if you've been in business 12 months or greater with 3,000 or more in revenue, we don't consider you a startup anymore. But if you come to me with a business plan and projections and an invoice or expansion information, or even if you're within, let's just say 18 months and you're still trying to get going and you've only made 3,000, but really it was from like 1 sale or something of the sort, I can try to get you to count as a protracted startup. So we could still count it as a startup route. So it just depends. But if you're a company that's the first year and you did 120,000 and you did a negative 110 and, net income because you wrote it all off, we're no longer considering those startups. Because it's like you almost made $200,000. So yeah, guys, and I will pass it on to Ida. Ida does our 504 loans, which are the commercial real estate. The Community Advantage Program can be used for 100% commercial real estate financing, as long as you can find a property 350 or less. Debt consolidation, startup costs, equipment, furniture to lease the space and to or build out the space that they need.
Thank you, Iman. Hi, everybody. This is a presentation of introduction to the 504 commercial real estate loans. Next slide, please. This is a quick introduction to the SBA 504 financing. The 504 product is generally for commercial real estate financing where your business is occupying at least 51% of the space, or you can also use it if let's say you're a machine shop and you're buying a super expensive CNC machine. You can also utilize this program to get a 90% financing for that machine. So the intro would be, what is an SBA 504? What are the advantages of the 504 loan? What kind of economic development impact that we're looking for with the 504 financing? And I will also cover the basic eligibility requirements. Next slide, please. So what is an SBA 504? Essentially, this is a 90% financing that we participate or we work with participating bank, such as Andrews Bank at Hami, who also offers the same exact product. So we partner with the banks, whereby the bank offers a 50% loan to value on the property, and SBA handles the 40% loan to value on a second trust deed. So the bank has a first trust deed, SBA has a second trust deed, and the buyer puts in 10% down payment. So essentially 50, 40, 10 is an SBA 504. Next slide, please. Who is it for? Again, it provides up to 90% financing with 10% down. The business has to be a for-profit that are considered small business by SBA. There's a certain size standard limitation, but most of the companies that I've looked at fit within that size standard. The business must be located in the U.S. and it has to be owned 51% or more by U.S. citizens or legal permanent residents. Next slide, please. Oh. So what is it for? Generally, it's good for straight purchase of an existing building where, as I mentioned earlier, the business must occupy at least 51% of the space. It could be purchasing of an existing building that includes improvements, or if there's any kind of fixture, furniture, and equipment, you can include those costs into the project amount. Again, the business must occupy at least 51%. That is an SBA ruling. That is part of the eligibility requirement. If the business said, I'm only occupying 49%, it's not going to meet the eligibility requirements, so they have to find additional space. It can be used to construct a new building. Let's say somebody bought a piece of land or they inherited it from family, they want to build something on that site. We can also handle that with our partner banks. And they have to occupy, if it's a ground up construction, they need to occupy at least 60% initially and then 80% in 10-year period. The money can also be used to purchase machinery and equipment that has a useful life greater than 10 years, because 10 years is really the minimum term that SBA would lend on. So ideally, the equipment has to be longer lasting than 10 years. Next slide, please. One of the advantages of the SBA 504 financing, actually it has a few advantages. The project can be considerable in size. There's no real actual maximum. The rate is very competitive, and typically the SBA debenture rate is a lot lower than what the fixed rate in the market. There's larger lending capacity. If somebody buys a building in LA at, $7, $8, $9 million, definitely a SBA 504 would be an ideal program to help support that acquisition. We do have also SBA have an appraisal latitude where in the event that the appraisal come in lower than what the valuation is, they can bridge the gap up to 10%. Next slide, please. The SBA 504 and its economic development. So the primary objective for the program is job growth and job creation. And this is like music to the ears of SBA. And we love doing that. We love helping businesses grow and create jobs and also job retention. Other objectives are to help minority-owned, women-owned manufacturing, and then reduce energy consumption, because we also have green projects that we can do, and anything that would bring in new income to the community, i.e. maybe new tax dollars. When you buy something, the tax generally increase, that helps the local community, and also job creation for the local community. So real estate ownership is essentially a wealth creator, and I think with this program, we can make that possible for a lot of the business owners. Next slide, please. Our 504 products. So for myself, I handle the tri-state area of California, Arizona, and Nevada. So we can underwrite and book deals locally here for the tri-state area, but we also have a wholesale platform within CDC Small Business Finance where we can do the entire 50 states. We have that available, but we are limited to the lenders that we use for that particular program. We use Morgan Stanley, City First Bank, and New York Life, but this particular wholesale platform can travel anywhere within the continental US. So going back to the 40% debenture, what is the SBA 504 debenture? Because SBA is really not in the business of lending money. We are the agency that packages and underwrites on behalf of SBA, make sure they meet the eligibility requirement. And also we work with the banks that are the participating lender to help qualify borrowers for this program. So a debenture is a debt instrument that is issued to raise money. Basically, it's something that gets sold at the pooled and sold at the stock market. In a 504, CDC, with the help of other partners, we sell it to private lenders, such as the large banks, insurance companies, pension funds, in exchange of funding the 504 second mortgage loan. So that's how we raise money. And the Small Business Administration guarantees the debentures that are issued by the CDC. So everything that we do has to line up with the credit qualification as well as eligibility that meets the standard operating procedures of the Small Business Administration. And we work closely with their field office in Sacramento to get a lot of the borrowers approved. And they have to review virtually everything that we do on a particular project. And so the last one is why choose us. It's a lot of CDCs in town, just like banks, there's a lot of banks in town. We are a premier certified lending partner because we cover a lot of areas. We've been around for over 40 years. We're headquartered in San Diego. Our company has a good reputation when it comes to lending in the 504 space. And also, we are a one-stop shop because my counterpart, Iman, is handling the Smart Growth program. And then so it's sort of like a one-stop shop for us. And, we can help different business owners with different credit needs that are not bankable. We're basically the alternative lender, like Iman said. The PCLP authority allowed us to pull approval without the SBA submission. I look at the PCLP, it's sort of like a silver bullet. We don't generally make credit decisions without sending anything to SBA, but there are cases where the borrower is really strong and that gives us the authority to approve the credit without going to SBA. But it's very rare because, you know, it's really kind of a risky, but we do have that ability. From the time we package the file, gather the financials, it takes about 30 days with underwriting and the credit management approval. I am the loan officer. I originate and I talk to the client and I package the file. I run the cash flow. I try to get an idea as to where I can try to uncover cash to make the deal work and to make sure that the cash flow is there. So basically, when you come to me, I'm the person that helps with everything from start to finish before we send the file over to credit to complete the underwriting and then ultimately to SBA for the approval. Next slide, please. We focus on veterans entrepreneurs. Over the past year, we've helped veteran-owned businesses with over 18 million in 504 loans. That's a large number, so we like doing that. In fact, we recently are participating in a rebate program that came out, and so for veteran-owned businesses, our CDC will be reimbursing part of the cost. That comes with the issuance of the debenture up to $5,000. Next slide, please. Oh, that's me. That's my contact information. Please feel free to take the information if you have any questions. You know, something might come up for yourself or anyone that you may know. I'm happy to answer any questions.
Wonderful. Let's have a big hand for presenter. Thank you so much. My name is Cesar Strodum. I'm outreach and marketing specialist for the Small Business Administration out of the Los Angeles District Office. We had this in observance of National Veteran Small Business Week. We're having events like this throughout the country, all over the country. So I'm so glad that some veterans joined us today and very appreciative. Happy veterans, belated veterans, you guys as well. Thanks. So now you guys have an opportunity to ask some questions. We have a few more minutes. The presentation's over. This is going to be streaming online at the YouTube channel. So I want to thank Lisette, our host, the Los Angeles Public Library, having this wonderful room that we had to have this presentation. So thank you, Lisette. Thank you, guys. I think if you have any questions, please, I encourage you. You have also one of the directors of one of our research partners here right now, which is the Women's Business Center. There's some literature that I invite you guys to take. If you have any questions, I'll also be available for you guys. Does anybody have, is this the end of the presentation?
Yep.
All right.
Thank you, everyone.
Thank you.